Hello and welcome to Macro Mondays, where we take a look at Bitcoin on the longer term timeframes and weave that into our daily analysis. Today is May 8th, 2023, and I'd like to welcome you to Landy's Crypto Corner if this is your first time here. I do the Bitcoin in 60 seconds videos. Those are short videos where I give you daily updated targets. Today's video is going to be a long form format video where we take a look at the longer term timeframes and kind of see where Bitcoin is at. Now, jumping right into it, we're on the weekly time frame here. And I did point this out last week, and we can see that we had a closure in the weekly candle above the upper first standard deviation. I had made mention that if we did see a closure below the upper first standard deviation, that the next target area would be the basis band. And it just so happens that the basis band has updated to a key daily level. So the daily level is right around that 24,800 to 25,300 or so. And that is where the weekly basis band is starting to come in, right across the high wicks of the consolidation major low that was just put in. So when looking at it from this perspective, we can take and throw on our support and resistance here, where you can see that I have the levels marked out. We've got monthly overhead resistance. We've got our weekly resistance here, which is coming in from this low back here. We have our daily resistance in the yellow line there. Excuse me. My voice is kind of breaking up. It's that time of year with allergies, so I do apologize ahead of time. I have the high wick of the range, low wick of the range on the daily. I've got the daily breakout level here. And then down below here, I have the other daily breakout level, the previous daily breakout that, helped propel Bitcoin's price to this new high up here. And that is where the basis band is starting to line up. And that's coming in at around that 25,200 in this case to 24,800 or so, with the basis band coming in slightly below there at around 24,700. You'll see that just below we do have untested weekly support as well. The close open structure from August of 2022. And then we've got our February close open highs here before this wick lower low, but close on a higher low that propelled us to new highs here. So very, very important area around that basis band here. And we're going to take a look at the fib structure, because the fibs line up very well as well. So if you pull a fib from the current wick high to the last wick low here, we can see that the 618 lines up very well with the current range lows here over at 26,500. We can also see that the 50% of this move is falling in line right here with that daily breakout level, or previous daily breakout level in this case. And then just below here, this white line is the weekly support. This is untested weekly support. So it would be nice to see Bitcoin test this area at around that 24,300. Just below there, we can see that the 382 is coming in. So we have good confluence there. And if you run the fib from the higher high to the lower low, the start of the move, we can see that the 618 is the key area here to watch. That's falling right on the previous daily breakout area, or that daily support zone. Just below there, in between the 618 and the 50% here, we have the weekly falling. And then we've got the monthly support here at 23.3. So if you haven't watched the previous videos, at the end, I'll quickly update you on the monthly, or maybe I'll just do it when we go over the dailies. But the monthly support and resistance, this is the close open structure on the monthly. This is where the monthly's closed. They were equal in their close opens, so there's a good area of support at around that 23.3, and then a little bit further down should that area get lost around 20,500. So, but from the weekly perspective, this area is big. Now, the weekly is not, I'm seeing a lot of really bearish calls for like brand new lows past the major low that was just put in. I'm not of the opinion that that is the most likely thing to happen. And I'll show you kind of why here. When we have this nice upward sloping basis band on the Bollinger Bands, Bollinger Bands are a volatility metric. So you have your trend. We have our nice uptrending structure here. So trend first. We just went over some of the support and resistance here. We have momentum, which momentum has slowed down at the top here and is beginning to reverse, but it has not fully reversed just yet. You'll see things like The regular Stoch, not a Stoch RSI, is turned and flipped to the downside currently. But in this case, until the low of the range is broken, I don't really look at that as being the most important thing to be watching right now. It is bias pressure down, but I'd still be targeting around that basis band basically. But when you see a nice uptrending basis band, which is the 20 simple on the weekly in this case, the area that you want to look for support would be the basis band to the lower first standard deviation. So that would be coming in around just under $21,000, around $20,800, and it can wick below, but closures above are typically what you look for. And we have this prolonged downtrending structure, and it's not abnormal to see chopping around while trying to reverse that structure, right, into an overall uptrend. Now, yes, we do have the etchings of an uptrend here, and we do have a fully confirmed uptrend, but it is not an impulsive uptrending structure, a parabolic uptrending structure like what we saw with the parabolic downtrending structure. So, and in this case, you want to see support being held around the basis band. We saw this back in March, and that's the big area that you want to see hold up. It has the most confluence as well with support and resistance as well. And it had two as wells in there. But the lower first standard deviation also is falling in line with support and resistance areas. So the basis band to the lower first standard deviation, kind of where you'd want to look on any kind of crash scenarios, retraces. And if things get really bad to the downside, lower second standard deviation is something that we should keep an eye on. And that is falling right now at the top side of the major lows highs here at around $17,000. So not too concerned about that. That's all very far away. When looking at momentum, though, you can see that it is turned down, right? So it is pressured down on the weekly, and it's in a critical area in the oversold area. But like I said, until it actually breaks down from the low side structure here at the wick lows at 26,500 on a close, we can even wick down to the basis band, and much in the way that we saw back here in early March. And it doesn't do much. It doesn't hurt the trend. It doesn't hurt the structure. And, momentum, yes, bias to the downside, but that can be shifted, especially if it's closing within this consolidation range. So not too concerned about that as it stands right now. But the week is young. And this, I'd mentioned this before. We might see something like what we saw from January into March. So that's not out of the question. And the way that things are kind of lining up with support and resistance, it's probably more likely than not, especially when looking at the daily and looking at momentum as it stands right now. So to the upside, though, if the highs are taken out, I'd be targeting up around the upper second standard deviation, which is currently coming in at around 32,400. And I wouldn't be looking for things to trade up much further than that upper third standard deviation. It may not even get there. That is a monthly resistance area just below that upper third standard deviation on the weekly. Upper third standard deviation is coming in at 20, at 36,275. And in this case, the monthly resistance is at $35,000, I believe. Now, it's not out of the question that could happen, but with Bollinger Bands, not contracted, they are starting to contract a little bit. But in this case, it's very, very rare that we ever see that third standard deviation getting hit without just some massive, massive event going on here. And usually coming off of consolidation. So if it did consolidate for a little bit longer, I could see that becoming the case. We'll see that it trended down and it did throw wicks at it. Sometimes not, sometimes hitting it and going past it in this case, and sometimes hitting it, but it's very, very rare. So, it's not outside of the realm of possibility to, throw a wick above the third standard deviation or at it on the weekly. I would want to see at least one more tick on the Bollinger Bands here for them contracting in order to really be a little bit more confident in something like that. And also the weekly is not looking like that, and the daily is not looking like that currently in terms of momentum and divergences and stuff like that. So when looking at this on a 5-day, we can see that this is, already headed in and around that basis band, which is just above $26,000 at 26,100. So in the 5-day structure here, which has 2 days and 2 hours to close, this is still a nice uptrending basis band. It will begin to flatten out if Bitcoin continues to trade here or trade under it. But we can see that $23,000, which is just below the monthly support to the basis band, is kind of the area that you want to see hold up on the 5-day. You can also see on the way up, wicking and closing above the second standard deviation, but not going outside of that upper third on the longer term timeframes. That's what you want to see. Come back and hold support at the basis band. And in this case, because this has begun to slow down in terms of its momentum, the basis band to the lower first standard deviation is what you want to see hold up. Worst case scenario, lower second standard deviation. And you don't really want to see it go below there or close below there. Otherwise, that's breaking the lows and starting to change the structure. So we did have the uptrending structure. We did have the higher low to higher high, lower low and divergence, and then put in the higher high. So we do have a bit of a lower high forming here. It is not yet confirmed. This next closure, if it closes here or lower, that will be confirmed as a high. And that will most likely be get test down to that basis band and lower first standard deviation. Of course, at close, these will also adjust up as the basis band is still positively sloped. And the momentum, though, as you can see, is turned to the downside. But I really wouldn't be looking at this as like a death sentence just yet. A lot of people are. There's the projection on it coming down here. It could easily turn back up. I'm not too concerned about it just yet. Many are looking for this to kind of do, the Mickey D's and then come all the way back down. And if it did that, the look on the Bollinger Bands for volatility here is not really, I'm not looking for those, new lows past that major low that was just put in. If anything, we swing around this low down here and, it might take a while to get there. I don't think there's enough liquidity in the market to actually crash it out, but that's just personal opinion. Weirder things have happened. So the 3-day is another time frame to start looking at here as we do see compression on the 3-day. Big area to watch is the lower first standard deviation again to that lower second standard deviation. Now we've seen this kind of over and over again on the 3-day. We impulse up, we get expansion, we come all the way back, and we actually find support on that lower second standard deviation because the length of sideways cools down the Bollinger Bands metrics enough that it kind of gives us a good bias on things. And it just so happens that that lower second standard deviation is coming in on a major previous daily breakout level at $25,000. So that is going to be worth watching, as that's kind of likely in play should we break down from this current range. The 3-day is also closing in 1 day and 2 hours. We've got the 2-day, which is closing today. And this is painting a bit more of a sideways structure or a ranging structure in terms of volatility. So when looking at this, we can see that the upper third standard deviation coming in above the highs here at around 31.5, lower third standard deviation coming in at around $26,000, with a lower second standard deviation kind of bracketing the low side of the range, upper second standard deviation bracketing the top side of the range. So this is painting a bit more of a ranging structure and not an impulsive structure. Now that can very easily change on closures below the lower second standard deviation or above the upper second standard deviation. Now in this case, we are seeing a slight bit of expansion to the downside because we are below the lower first standard deviation. So you'll see the etchings of expansion to either the downside or the upside when you see closures above the upper first or below the lower first. That's when you'll start seeing expansion, or if it's coming off of like a big expansive move to the upside, you'll see contraction as it starts to return to the basis band and the lower first. In this case, nice uptrending expansion. And then the return to the mean was down and holding around the lower first to the basis band here. Thus, we got a nice cool down of the BBWP, which is just a volatility metric for the Bollinger Bands. Excuse me while I adjusted my seat. Sorry if you can hear that. But the only way that I'd be looking at this as getting re-expansion is on a closure below the lower first or lower second standard deviation or above the upper second standard deviations. So, and this could very well start to do that, but we see that, it's kind of just been going sideways for volatility, and we're getting that same look on the Bollinger Bands here. So we have sideways volatility bands basically, which paints a range. That doesn't mean that the range can't break, because if we do start closing below here, we'll start seeing more aggressive expansion to the upside. Closer to, below the lower first standard deviation will then turn the basis band and the entire set of bands down, thus beginning expansion in this case to the downside. So, but I'd be looking for it, like on the daily, I'd be looking for it to bounce around the lows here at 26,500 if it does get there. as it's currently trading at about $1,000 above at 27,500. Now, when looking at the daily, we can see that we are pushing that lower second standard deviation that I called out in yesterday's shorts video. That it has updated, so it's moved down a bit with price action as it does update live. And yesterday's video was around 27,250 or so, and I had mentioned that the areas below the lower first standard deviation at $28,000 to look around $27,500 to $27,000, where the lower second standard deviation is coming in. It was right in between $27,500 and $27,000 at around that $27,250. We have hit that in today's candle just about, with the low side coming in at $27,280. So about $30 off of where that band was, and it has adjusted down. So any kind of closure below there at 27,150 or so, we would start to see expansion. But the look on BBWP right now is not one that I'm looking at as turning into a daily downtrend just yet. In this case, we would need to see multiple closures below the lower second standard deviation to get BBWP up over the moving average here. Oh, sorry, let me do that the right way. To get BBWP up over the moving average here. And when we get that, that would be a positive slope on BBWP and the moving average while trading below the lower first and second standard deviations would beget a daily downtrend. Right now, this is just a big consolidation as long as it's holding the wick low there at around that 26,500. So I'm not looking at this as being a big death sentence like some are at the moment, but we can see that there is some key areas on the table now. And if we turn on the local support and resistance, we can see that, losing that 28,000 at the daily breakout level, which the daily breakout is 28,600, but 28K is this consolidation low side structure over here. Losing that, coming down, testing the lows over here. Pretty normal stuff. We can see that the lower third standard deviation on the daily is lining up near perfect right now with the range wick lows. We can also see that BBWP is below the moving average, so this is more likely not ready to break out to the downside or to the upside in this case just yet. We might see key areas breaking, and that can still color your bias in those lower term timeframes, but from the daily trend perspective, not looking for like a trending move or an impulsive trending move to begin right now. For instance, we might see this, this week, but not today. And that's where if we do throw a wick down at the lower third standard deviation there, that's at the range wick lows at 26,500, I think it's going to bounce. And then we come back to it after that. If it does regain the lower first standard deviation in this $28,000 area, I'd be looking for it to test around that 28.6 at the basis band to the upper first standard deviation there at around 29,200. Anything that's failing around 29.5, which is the highs here, to around that $30,000, still just, it doesn't mean much. But if it can get above there, get above the upper second standard deviation and come up here to test the highs at around $30,500 to $31,000. But as I said, there's major weekly overhead resistance here at around 31.8. That is also a monthly level. And then there's a daily wick high up here around 32.4. I think that, and the same goes for the downside. Throwing a wick at the lower third standard deviation, unless this gets really good contraction and then aggressive expansion, we rarely close outside of the lower thirds or the upper thirds. So that's where I would be looking at these areas. So upper third to the range highs at around, 30,500, which is the close open structure, to the wick high here at $31,000. Probably initially get rejected. Same for the downside, range wick lows, lower third standard deviation, probably an initial rejection. And then we come back to it from there, because if the basis band, lower first standard deviation is found as resistance, then we're probably going to trend down to the previous daily breakout level, $24,800 to $25,000. And then we've got the weekly support down there at 24.3 and the monthly at 23.3. Those are the big areas down below. And above, we've got weekly resistance at that 31.8 to 32.4. And then we've got monthly overhead resistance at $35,000. That's pretty far away. We would need to see, maybe a deviation below this low, hit this support down here, do a little consolidation, and then try to move up. I don't think that's the play right now, to be quite honest. I think that if you want to get into future projections, which I'm not really big on, but if things were to continue down from here, come down here, maybe swing this and then come down a little bit further, regain, and then try these areas and then try up for the monthly up there. Something along those lines. Yes, that's like an inverted head and shoulders. No, I didn't exactly mean to do that, but price bounces around. That's what I could see, a little bit of consolidation. But if it does just straight up drop that weekly support, it's going to come down to the monthly down here, which is at 23.3, and then the next monthly down here at 20,500, and then possibly even swing this low side structure down there at 19.5. So if that stuff starts happening, I will update you. I'm starting to do, in addition to the Macro Mondays videos, I'm going to be doing a midweek stream, either Wednesday or Thursday. I'll try to make it, get you guys in there. You can ask questions, keep it, we'll just keep it chill. We'll hang out and take a look at price action and maybe even look at some alts. I do have an application that I programmed that I named Altcoin Roulette that just randomly picks altcoins, and then we'll do some TA on them. And that helps with discovering, good looking charts that might be worth, trading. And that will be something that I will discuss a little bit more in this week's live stream. It's either going to be Wednesday or Thursday. I'll give you guys a heads up in the community notes on YouTube. So yeah, that's all I got for you today. I want to thank you all for all the new subscribers. I appreciate you subscribing. I hope you watch some of the long form videos and give me some feedback in the comments. And if you like this content, do the normal stuff, right? The like and subscribe. And if you do think that this stuff will be helpful for others, go ahead and share it. I will have educational videos. I've been asked a lot. Now the educational videos are going to be the basics, like you don't know what the basics of charting and trading, charting and technical analysis are, rather. Kind of walk through some of the basics of that, and then the basics of trading. But I'm also going to have, a schedule where there's kind of a basic series that everyone can go back to and watch at any point. I think it would be valuable even for people who understand this stuff as a refresher. But then I'll also have more advanced topics that are going to kind of be interweaved in there. For instance, Bollinger Band strategies and, different support and resistance plays, swing failure patterns. Might even throw some Elliott wave stuff in there. We'll see. But that's all coming up soon. I'm waiting to get some more subscribers, to be honest, because right now I don't have a lot of feedback. So I need more subscribers, more people watching the content to actually get that feedback so that I can, as I'm making those videos, adjust to what I see people would like to learn. There's stuff that I want to get out there, but then, stuff that people want to have their questions answered, right? If there's something either in a previous video or, something I can make a dedicated video for, or that, feedback based on a video that's put out there, like, hey, I need some more detail on this, that kind of stuff. So once I hit, we'll see around 500 subscribers, 1,000, that stuff will start coming out pretty regularly. I am working with some guys that are helping me with that. So I want to thank you again. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.